The Ethereum Merge is about to happen. It's actually due in less than 2 weeks, and in general, everybody seems to be pretty gung-ho about it. But unfortunately, we do believe that the merge may well trigger a pretty big crypto crash, and we have two very valid reasons to support that statement. We'll share those reasons with you, and if you agree with us, the question then becomes, what will be your strategy to counter that crash, or perhaps even use this opportunity to profit? One way or the other, my game plan is ready, and that is exactly what we're covering in today's video. Welcome to the channel TGIF and happy Friday. My name is Maddie and this is Altcoin Buzz. We are a crypto investment research company. Now, as with any event in crypto, we're very excited about the upcoming Ethereum Merge and subsequently ETH 2.0. But look, this video is only meant to be informative in nature. I am not a professional financial or investment advisor. And so the stuff that we talk about here should not be considered to be official financial or investment advice because it's not. All right, so before we dive into our game plan specifically on how to manage the upcoming ETH merge, we're going to highlight some of the risks here that are associated with it, beginning with risk number one, which is stablecoin stability and the risk that faces right now. So the Ethereum Merge is threatening stablecoin stability because most stables are locked in smart contracts on Ethereum, which of course is a dominating blockchain in the DeFi, decentralized finance space. And the two biggest stablecoin issuers, Tether with USDC and Circle with USDC, they've already pledged their support for the merge. And look, having these two giant players on board, that is important, that is a positive. And so all systems are go. At least you'd think so, but that's not exactly the case. And that's because the merge has the potential to unsettle some stablecoins. And MakerDAO highlighted 5 major issues that the merge could trigger. First of all, negative funding. This just means that stablecoins can lose their peg. So your one USDT, for example, may not remain pegged to $1. Number 2, perpetual contract backwardation. So futures might trade below the market's spot price. Number 3 issue that they highlighted is network downtimes. And number 4, replay attacks, which is a vulnerability of Ethereum smart contracts and can be exploited by hackers after the merge. And now the second major risk associated with the Ethereum merge is the risk to DeFi. So not only MakerDAO, but now also Aave is actually concerned about the Ethereum merge. And on the 30th of August, Aave started a governance vote. And that vote incidentally ended today on September 2nd at 12:15 p.m. Now the vote was concerning the proposal to temporarily suspend ETH lending before the merge. The idea here being that they want to reduce the risk of a breakdown in Aave's DeFi lending protocol. And that's because Aave is seeing massive jumps in ETH borrowing. Users are borrowing more ETH in anticipation that the merge will pump ETH hard. And they're going to get free money. But look, if traders continue to do this, it could disrupt the entire DeFi market. Binance will also temporarily pause ETH and ERC20 token deposits and withdrawals during the upgrade. But relax, because it just adds to the stability during the upgrade. So it's not a bad thing in our view. Other exchanges seem to be doing the same thing. They have the same game plan. So it should not affect trading ETH or ERC20 tokens. There is also an Ethereum node issue that you should be aware of. This is kind of a surprising last-minute news flash that comes to us from Germany. So the second biggest cloud storage provider for ETH, which is Hetzner in Germany, seems to be the culprit. They stated that hosting nodes is against their terms of service. And this comes after years of hosting almost 10% of the Ethereum nodes. Now, this announcement comes at what's already a delicate moment, kind of out of nowhere, and all of a sudden. They don't allow mining POW or staking POS. And in the end, people using Hetzner services can move to other providers, fine, yes, but the timing just seems kind of odd and it could hurt Ethereum's price action. That is the reality. Really, it just seems like there are a lot of concerns orbiting around what is the biggest crypto event of the year. Just ask yourself the question, are you ready to put all or even some of your net worth into this man's hands? Personally, I am not, and that's why we've come up with this game plan that we're about to share with you. But just before that, let's briefly talk about the possibility of an Ethereum hard fork. Regarding the question of whether an Ether hard fork is still likely, well, at the beginning of August, there was lots of talk about a hard fork, especially by one of the OG ETH miners, Chandler Guo. And although not impossible, chances for a hard fork doing well seem kind of marginal at this point. According to our research here, which can be found on altcoinbuzz.io, there is a slim chance for a hard fork. As we wrote about in this article, such a hard fork is unlikely to survive, however, because a hard fork with the current scale and size of Ethereum is not something to look forward to. Everything will duplicate and cause all kinds of issues. Another issue raised by Ethereum's POW to POS transition move is, where will Ethereum miners go? It's a question that we still don't have a clear answer to. A better option for ETH miners could be to join the ETC chain. And based on observation, that seems to be what they've been doing lately. They still have all their expensive mining equipment, after all, don't forget, and this allows them to use it there. We also wrote an article about alternative mining options, and Ethereum's miners surely must have looked into some of those options because, again, they still have all that hardware. All right, with that context now established, let's get right into it without any further ado. Let's discuss how we are going to be managing ourselves the upcoming Ethereum Merge. As we just discussed, it's unlikely in our opinion that a hard fork is going to happen, but at the same time, there are many people out there that are hedging that bet that feel it is a possibility. If you're one of those people that insist an Ethereum hard fork is imminent, then here are some strategies that are going to work well for you. Okay, so strategy 1. We can already see that many people are borrowing Ethereum on platforms like Aave. And we know that Aave may stop ETH borrowing, but then again, there are other lending platforms as well. So this is in anticipation of a hard fork. And even though it'll be 90 to 95% worth less on the POW chain, it's still free money. Strategy number 2. In a Binance notification here, they show 2 scenarios. One without a hard fork. Option B is with a hard fork, scenario B. And in this case, you get the forked token from the minority chain at a ratio of 1-to-1. So that's just another chance to get free money. And what we expect is that there will be a massive sell-off of ETH after the merge, with or without a hard fork, by the way. And here now specifically is our strategy if that happens. All right, so massive Ethereum sell-off strategy number 1. Go to a DeFi lending platform and swap stablecoins like USDT, USDC, or DAI for ETH. You won't have any problems repaying this since you can pay the debt off with your borrowed ETH. It doesn't matter if the price goes up or down, the ratio remains 1-to-1. Now, a pro tip from us. There are 2 different borrowing rates, a variable rate at plus or minus 6.5% and a fixed rate at plus or minus 11%. Go for the higher fixed rate. Many people may follow this strategy and the variable rate may increase quickly. Now, it may seem high, but you're not going to borrow it for a long period of time. Maximum is going to be 2 to 3 weeks. And then you have the option to sell off after the merge. Strategy number 2 for a massive Ethereum sell-off. This time you can look into DeFi liquidity, and around the merge, there's going to be plenty of transactions. So get into a position in a fairly safe stablecoin pool and just collect the transaction fees. Here's a third and final strategy for the potential of a massive ETH sell-off, and that's to find chains that miners may join. From a few scenarios like ETC, Ravencoin, that's RVN, or Ergo, ERGO, it seems only ETC currently is attracting miners. The hash rate from ETC went from around 30 to 45. That's the only hash rate that shows some momentum. So if you want to be a little bit more speculative, you can get into a position with ETC on an exchange. However, there's also this thing called macroeconomics, and that's been pretty good recently as far as being able to throw a few wrenches into the machinery. There's, of course, the Ukrainian situation right now, inflation in Europe and the USA. Certainly winter is coming, so never a boring moment, never a dull moment, whether in macroeconomics or by extension cryptocurrency. So here we are at the end of this ride. It seems like the merge may have some impact on stablecoins due to censorship. The US government drove this point home with the Tornado Cash sanctioning. We also saw that a fork is not that likely anymore, at least not in our opinion. That debate looked more live in early August, but the positive news is that newer stablecoins come knocking on the door. On the other hand, regulation for crypto is also underway. As we already mentioned, this may not be completely negative. It's not really a bad thing at all, because if we want to see mass adoption, we certainly can avoid some form of regulation. Never financial advice, but of course, best of luck if you choose to invest. If you're going to be actioning in some way the Ethereum Merge, which is upcoming in just a couple of weeks, let us know what your strategy is in the comments below. Maybe you've borrowed one of our strategies. Maybe you've come up with your own. Let us know how you're managing that situation, how you plan, hopefully, to profit from that. But once again, never financial or investment advice. If you're still watching the video, kudos. Be sure to like, subscribe, share, hit the bell to receive notifications. And if you like this content, check out these other couple of videos, which should be popping up to my left, to my right. Stay safe out there, members of the Altcoin Buzz Army, TGIF. And as always, we hope to see you again soon in our next video. Take care.